a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about communication services ETFs. Communication services is one of the best performing sectors year to date. The sector is up about 32% in 2023, just behind technology sector, which is up about 34%. But communication services ETFs don't get a lot of attention. It is a relatively, not as well known as hot as technology sector because it is relatively new. It was in fact created in 2018, or we can say it was renamed and broadened in 2018. The old telecom sector was broadened, and two of the mega cap most popular stocks in the market, Google parent Alphabet and Facebook, which is now known as Meta Platforms, they moved to this new sector along with Netflix and some other stocks. The sector is quite top heavy with the Meta Platforms and Google. They account for almost 50% of the portfolio, and the sector's performance, the excellent performance, 32% year to date, has resulted mainly because of these two stocks, because Meta Platforms is up about 117% in 2023, whereas Google is up about 41%. Netflix is up about 37%. That accounts for about 5% of the portfolio in this sector. Now let's take a look at what is going on with these stocks, why they are surging this year. So Google, we know Alphabet has been investing in AI and machine learning for many decades, and it was seen as an AI leader for many years, but the company was surprised by Microsoft's launch of ChatGPT late last year. But, initially the company scrambled to roll out its own chatbot, Bard, and the launch was not really impressive, so shares fell. But lately, the company has announced many new products and services which use generative AI. So Google is and will be a beneficiary of AI going forward as well. Another reason why Google benefited this year, its cloud unit reported a profit for the first time. And of course, the latest results were better than expected. The company also announced a new share buyback of about $70 billion. And like many other tech giants, the company has cut costs, laid off 12,000 people. Now, Meta, which is up about 117% this year, the CEO, Mark Zuckerberg, called this year the year of efficiency. They have cut costs very aggressively, laid off about a quarter of their workforce. Now, the company has also seen a rebound in digital advertising sales, and results benefited from that. Now, lately, we know that Apple launched its Vision Pro headsets yesterday, and so we will see increasing competition in this AR VR space, augmented reality and virtual reality. Apple will be a leader, no doubt, most likely. But Apple's headsets, the Vision Pro headset, costs about $3,500. So not many will be able to afford. But Meta may be able to get some initial help from this increasing competition, because their Quest headsets cost only about $300 and $500, the two different versions. So more people will be able to buy their products. Netflix has recently launched its password sharing crackdown in the US, so its results will depend on how that goes. Now let's take a look at ETFs in this space. So the first one I'm highlighting is the most popular product in the space by State Street. The ticker symbol is XLC. Market cap weighted, has about 12.6 billion in assets and charges a very reasonable expense ratio of 10 basis points. If you want to learn more about this ETF, please go to the quote page on Zacks.com and you can read our research report articles, and using the link you can go to State Street webpage for this ETF and learn more about this ETF. It has 24 holdings, and as I mentioned earlier, Meta Platforms and the two share classes of Google, Alphabet, they account for more than 50% of the portfolio. Netflix is about 5%. Now, the second that I'm highlighting is by Vanguard. The ticker symbol is VOX. This also follows a market cap weighting scheme, but it has certain caps on holdings. And we'll see the difference in the performance and in holdings weights. Same expense ratio, but a bit smaller, 2.8 billion in assets. And there's another product which follows the same index. It is by Fidelity, and the ticker symbol is FCOM. Fidelity's product is slightly cheaper, though not a lot of difference, 8 basis points, but it is also smaller with about 700 million in assets. So again, to learn more, you can go to the quote page on Zacks.com for VOX, and you can go to Vanguard webpage and see what it holds. So this has 116 holdings, and if you look at the portfolio, you will see that same top holdings but slightly lower weights compared to the State Street product, particularly for Alphabet, because of the caps that I mentioned. Now, EWCO has a product which is slightly different. It follows equal weighting. So if you don't like the top heaviness in market cap weighted ETFs, you can look at this ETF. This is slightly pricey because of equal weighting, 40 basis points, and also much smaller with 122 million in assets. And again, you can go to the quote page on Zacks.com and the EWCO webpage to look at the portfolio. Now, since Meta and Google, Netflix, these have done so well, so these are the top holdings, but at the time of rebalancing, these will be all brought to equal weights, and other holdings include Live Nation, Electronic Arts, etc. And on the last slide, I have the comparative performance versus the S&P 500 index. The first State Street product has done the best this year. It is up about 32%. The Vanguard product and Fidelity product, because they track the same index, so they have delivered the same performance, about 25%. And the equal weighted product has actually underperformed the S&P 500 index. It is up about 8% year to date. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer. Also, make sure to subscribe to our YouTube video channel so that you do not miss anything. And I'll see you next week.